Hello traders, welcome back, and we will proceed to a third step here, which is using the Andrews pitchfork, which gives us how the market is revolving around the mean price, and we will take advantage of the extensions to see the potential channel it will create as the market unfolds through the price and time tunnels. Now, I'll also give you a bonus where we can use this to also time the market. So now here, what's going on is we go back. Let's stick to this whole structure so we know we're understanding the game. So in this platform, there are two kinds of pitchforks. One is modified shift pitchfork, Andrews pitchfork. They have the same logic. The logic is pretty simple. In statistics, there's a mean, median concept, which also is the average concept. You can see we have Bollinger Bands, same thing. We are wrapping the extension of two standard deviation in Bollinger Band across the mean. Now this is another way of doing it, what we are about to do. We always start with ABC. The starting point of any complicated structure, any complicated pattern is A, B, and C. Always. That's the fundamental truth. Now this is a W pattern. W, just like the word W. Break off this W, middle is a long. Now this is an M pattern. Break of this middle is short. This is W pattern. Break of that is, middle point of that is long. This is W, crooked W, but still bigger W. Break of that is long. Right? So you can play all that. You'll not find anything which is not. This is M pattern starting. Break of this M bottom is short. It comes back to retrace, touch this, retrace it, touch it. Right? Now you can say this is W. Break of this middle part of W is long. So everything starts. This is M, crooked M. Break of that. This is the middle of M is short. This is W. Break of that middle part of the W is long. Right? Alright. But you can see this W is also A, B, and C extension. Right? And this M, which I'm calling from M from here, the A, B, C. This is like M, but again this is A, B, C. This is M. Oops. If this is M, break of that is low, then we can also do A, B, C. Every structure is part of ABC. If you think this is W in your mind, break of that is this, but this is also A, B, and C. Ends here. A, B, C ends here. Now you know why. A, B, C ends here. One of the level will be here for sure. A, B, C ends here. Bounces A, B, C. Bounces from here. See that? A, B, C. Bounces from here and here. We know this levels. Now you can see visually what's really going on. So everything starts with ABC. So there's no reason why we cannot use the same ABC patterns to also look at the mean reversion rotation of the market. Oopsie daisy. Let me put that zigzag back percentage, and for S&P I would like to just do it 0.25 or 125. It's up to you. All it is doing is giving you pivots, because you can just see pivots. Pivot means change of direction. You can just see it as well, but this one gives you a little bit much better mathematical structure. So we'll go from here. Okay, now same thing, we have to identify what is ABC. ABC is just starting of a new trend, here or here or here, right? So here you can also do this bigger one too, A, B and C, huge, right? It will also predict something in the future. Let's try that one too. Bigger one will not go to 900, it's gonna take months to get there. So if you go with this A, B, C, you went somewhere here, did not even reach that point. Is that the right ABC? Bigger waves, right? Was that the bigger wave? Yeah, looks like right ABC. It did not reach any of the levels, which means it did reach here, which is like, what is this one? The AB equal to CD. This is 100%. Right, see that? It went to 1.27, I think. I didn't discuss that, but there we go. Now if I go to the pivot, instead of doing the low, go to the close. Where is it? .27 is also very critical. I forgot to mention that, but okay. So I'm saying is go from sometimes the low and the high. See that 127. So AB equal to CD is the minimum law. Impulse AB for the wave to be over should meet the CD. And I'm saying 1.27 of that is a flush area. This is the area where they'll flush people who want to go short here, double tops. They're flushing people. They're doing a false breakout just to flush them down. This is where they're trapping the public. This is a trap zone between 100 to 127. Okay, I forgot that one, but that's fine. So bigger waves, that's going to be very important. Alright, so now we know what's going on, right? So ABC is everywhere. So now this, in this down wave, we can start from anywhere. Market went up, it broke this pivot, then this, we can use this new ABC, we can use this ABC, right? So when market is going down like this, we can use the ABC from bigger one, as we used it from here, ABC bigger one, you can use the small ones. So this, we are trying to use ABC to now see the rotation happening towards the mean, in the down direction, in the up direction, and we will just look at the pullbacks out of the mean area to come back to the mean. And we will try to use, if you don't, I think you guys have at least Andrew Pitchfork, so let's use that. It may not give us what we need, but give you the idea. This is what you get. Now you can add some values here. Okay, you will see same values being added here, so we can add 1 2 4. 1 2 is enough for now. Okay, so what we are saying is, for this A, B and C, this is the mean point. If market is in an uptrend, it will go up. This is the mean. Let me make this mean little fat so you know what I'm talking about. So this is the fat mean, boy, and it will pull everything towards it. This mean point is what we are after, and we should see in a good trend structure, market will go up and down the structure, hug it. If it doesn't, if it breaks it, then we know this is, the trend is no longer strong and valid. Okay, so that's one thing it does. Okay, gives you, if the market is staying in the zone, this zone, then we know trend is valid. Otherwise trend is weak and it's gonna fall off, and it does. fall off, right? So anyway, in this ABC, first thing we notice that in this first ABC example of this fifth pitchfork, that we are looking for this guy to revert back to the mean. And where's the mean? This purple line is the mean. It goes precisely to the mean line, right? Now, if it goes to the mean line, now you see that now it's now creating a virtual channel, and we are also extending the channel. And we are saying, if the price is good in a good structure and this format is good, it's gonna go up in this channel. It will go up down here, go up here, break up. So I can short on the top, long on the bottom, short on the top. I can rotate in the mean as long as this trend structure stays valid. So we got here, bounced it, came down here, bounced it, then so right now we're looking for longs only, right? And then short at the mean level. So I went here, shorted here, okay, that's fine, we worked out, luckily. Came back to the channel. It should have done something like this. It did not. It went here, but in a longer, slower way. That means they had to fight. What is going on psychologically? They had to fight, slow dragging fight. Not a strong trend. And this is what it shows. Hey, it fell off the channel. It's not really that strong trend which we thought it is. Alright. So, but this is what we will use it for. So there's nobody stopping us to adapt to new way of doing things, right? So we got this long here, short here, that this was supposed to come down here, it did not, right? That's fine. So we have one evidence, hey, this guy fell off the channel. So what do? We got good one trade, made some money. You bought a car. Now we want to adjust this. Now this is what most of the platforms have. They don't have modified SHIC. So what we can do is, there's nobody telling us not to shift it. We will shift it. See this one? I'm saying, okay, this channel maybe was not right. Let me hit two tops together. So I have now what we call as curve fitting. I'm making this handle loose. I'm keeping my pivot straight. I'm keeping my B and C straight. I'm moving my A and curve fitting it. I'm curve fitting it to where I see there's a lot of touches here. See that? Touch 1, touch 2, touch 3, touch 4. That gives me an idea, okay, hey, this is a good channel. Maybe this is a weaker channel, not a stronger channel with a higher angle. It is a weaker channel, nevertheless in the up direction, but in a lower slope. And we curve fitted that, keeping my A in the same vertical line. I'm just moving it up and down. I'm just not moving like this. You can, doesn't matter, but I just keep the A in the same vertical line. In fact, it should not really matter, because unless you're using shift modified, it should not matter, but here it doesn't matter for us. But just to be on the safe side, we know what happened here. Initially it was supposed to be that way, right? It did not work out. It just worked out once. Right? Worked out once and then it fell off. It was supposed to hold here and go up. Or we can do it precisely from this guy in the close. Sorry. Okay. So this one worked out once. It took a long time, but it went down to the channel where we were expecting, and then expecting a bounce. We got a little break. So we can see this as strength. Or the slope is not correct. The strength is not what we're expecting. We were hoping it'll boom, boom, shaka shaka, but it did not. It's like psh, sideways action, right? So we can keep this channel, or what we can do is we can just draw this and hey, this was the initial idea of us going somewhere, and it did not, right? AB. So this is where the A, like BC, should be rotating in this fashion, and some extension on the top and the bottom. The extension I added is 1.6, 2.6, right? And you can use different Fibonacci numbers, doesn't matter. So we can say, okay, this is not valid. So now what I will do is I will keep this first line there, and I will modify, and I will try to at least touch few tops and bottoms and say, okay, now let me modify this guy. There's so many ways you can modify it. I'm trying to make the price rotate in this cycle, right? So now when market is here, it came down here and we saw, hey, it's not really holding. There's nothing stopping me to draw this channel either. So I said, okay, let me adjust this. Now it's touching point 1, point 2, point 3. This may be the trend it is trying to follow, not the trend we were projecting initially. So I will draw this channel as well. I said, okay, maybe it is gonna follow this channel because the other one may not be the correct one. So I can now go and change these trend lines and make it like, dotted ones, so we know these are older ones. It's all a visual impact because this is important. So here, this was the projected channel, is going in a weaker channel like this. And what we need is, we need some to touch points and say, okay, this one was failing because it did not reach, so now we modified it right away. Or you can just do it when you see these 2 points, you can also modify and have this built as well. Nobody's stopping us. But once the point comes here, we have 2 points, and it comes down, we have 2 points. We need 2 points, and then we modified it to touch one of these lines here. Now you see very precisely 1, 2, 3, 4 touches. Bottom touches. Top did not touch very well, but it is rotating in this direction now. Right? This channel was there, not even there. Now it is showing sign of weakness, but it also reached our level. Right? It also reached one of our channel, this level. Missed by a few points, that's fine. But options, we don't care. So it is now following our channel principles. So now there's a smaller channel, and the green channel is working out very nicely. Extension of that channel is to the higher channel. See that this is not visible from any other way. This point was not linked to this point any other way. Now we have a picture where market is rotating, and I will take a shot here. Now we have ABC, which we did here, short location, and we have this location of price extension of the channel extension. Now they merged together. Now we have a better strong conviction to go short. There's no indicator, nothing, no news, nothing. It's a pure technical way to see the market structure. Right? So I want the mean. This is the mean. I want it to flip the mean. Below, go to the mean. Below, go to the mean. Up, go to the mean. Up, go to the mean. Below, go to the mean. Up and up, go to the mean. Now break the mean, go up. Now this one is broken now. Right? So we had this ABC targets here. Good target to go long. This is ABC from here. We saw that, right? This one green line, ABC, channel. 2 confluence of things. 2 things happen here. Now you see what is really going on in the market. We have structure where ABC is coinciding with the channel extreme lines, where we have a double confluence giving us more confidence to go long against the trend, right? Go long. Now you see this one, everything is now 161. Now this is 100%. This is, I think, 161 right here. 2 trend lines and 161. I can make this there we go. So save it as default. You can have the same numbers I have here, and there we go. So 161 has moved very far away from the mean. We'll try to see if it goes there back or not, right? So now we have the structures coming in. Now this channel has been broken, right? And it's not going to hold this. So this channel is now also broken. At the same time, this is going down. So what we have to do is, okay, we played up and down so many times. We played this, we played this, we played long, we played long, we played long one more time, we played one more time long, right? So when this is happening, when we hit the first structure, this is happening, we have to start drawing the down channel as well. But this is the up channel swings. Now this is going to be down channel swings, and they will coincide. Now you can see I will do what? Same thing. I need to have A, B and C. This ABC will be a very narrow channel. I'll use the bigger one, A, B and C. So let me draw these lines. Before I remove anything, I want to draw this line so I know my context is there. And hey, these are the lines which we had going in the channel. Okay, now we can get rid of it. We played successfully all the sides. Now I'm saying, okay, let's play this side also. While this was going on the top, the bottom, there's no reason for us to not draw the down channel here, because it reached the top, it may go down, it could break too, we don't know. So we're gonna draw that. I'm gonna use the older tool, A, B, and C. So what happened here? This channel is the mean. Up, down, up, down. See, that is gonna rotate in this channel until it breaks, which is fine. This hourly chart, we're not holding it for months. This is short-term trading. So now we are here. Now you see I'm putting the things together. I'm putting the third element together into my first two elements. First element was this ABC endpoints. This is the endpoint, and also bottom of the channel. Right? Now this is not the bottom of this. I didn't put any internal retracement of these channels. This channel is 100%. If I put, I think the line was somewhere here. I didn't put it, but so we played these points. We played these points because this is how the channel was rotating. In the inside one, this is the extension, and the outside one, and this is the this is 100%. This is 161%, and now. Okay, now I'm seeing the structure. Okay, market is going down. ABC here, ABC here. I saw already plotted ABC here. So I started plotting this ABC here. So if I want to go down the structure to this point, from this point we went long, right? And then what happens here? Remember, we put the channel here from A, B, and C. Now this is top of the channel. What else is going on here? What else is going on here? Let's expand this. Now you see the difficulty of trading is not being able to integrate things together. And that's the challenge. So now here A, B, and C. Let's put this A, let's put this B, let's put this C. So on this ABC, this is my short 161. So what I will do is in the top of this, I will draw this 161 to 261 area. Okay, I'll take it out. Right, from this small ABC, this is my 161. Smaller ones, smaller waves go to 161. Bigger waves try to go to 127, 161 also, 12700. Right, so we are using all the small waves here. Small waves here, bigger wave here. This is a bigger wave, 1999 here. So the endpoint, biggest endpoint of the small wave. So this small wave gave us endpoint 1, endpoint 2, endpoint 3, right? And this smaller wave here, ABC, gave us this endpoint. Got it? This ABC gave us this endpoint, this endpoint. This ABC gave us this endpoint because I can see where my blocks are placed. This block is placed here, so as red is going down, it should be coming from here. ABC, I can test it. Now I have a picture. ABC, I did not draw this one, but now I drew it. ABC, this is coming from this ABC. Now what has happened? I applied law 1, ABC. What is my law 2? Retracement. So let's do retracements. You can just do visually, you can see this from here to here, the height. This is roughly 61% into the move. 50, 60 into the move. So this is what has happened here. We have retraced, or what we call is it traced from here to here to the yellow and green lines. We saw her, right? So we have two things here. So one thing is ABC. Let me put it down here. Now we are integrating things together. It's all about integration. So first one is ABC, smaller ABC wave, target 161. target endpoint. That's law 1 applied here, right? So this will summarize everything I have to say for these three things, and I'll give you one bonus, which is the timing using this method. I have so many ways to time the market. I'll just give you one free because I think that shows my goodwill for society. Two is ABC means Fibonacci, right? You got it. We're looking at the retracement of first impulse. 0.618 or 0.5, right? Or 0.4, roughly giving you an idea, right? So 0.38 Fibonacci. So that is the second thing, all right? And the third thing is what we're doing right now. Andrew's channel forecasting. Okay, so we are going to trade channel tops and bottoms, right? All right, the last thing I'll give you is to use the channel itself to time. This is a very primitive timing method, but all these four things, if you put it together, will change your life forever in the right direction. Then you will be tempted to go pro with my advanced education, which is going to be pro education. So which is a 12 months program, 2 hours a week on Saturdays, and you'll get much more advanced tools and better knowledge. But this alone, you are able to see the structure. This alone will give you huge money. But if you want to be the master, majestic master of the universe, cosmos, under the sun, under the cosmic guidance, then we have to talk business. For now, fourth method we will talk about is timing wave points. All right, using Andrew handle. All right, I just invented the name, but there we go. So this is the concluded video of this method, so I will do it right here. Alright, so did we follow the first one? Print it out. Where is my ABC? Well, from this small ABC, this is printed. Okay, number 1 is done. We know number 1 where it is. Number 2, retracement of first impulse. First impulse is this, boom. Retracement is here. They coincide. Yes, they both came together. ABC endpoint of this and retracement of this prior wave came together. Andrew channel, down channel from this A, B and C, right? Let me take care of that. So you know. All right, this is A, B, and where is the C? Is right here. Okay, so I did this A, B and C, and I drew this channel. All right, so Andrew channel, are we on the top or the bottom? On the top. How top are we at? 161. Dot 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 is 161 extension away from the mean. Three things came together. Perfect. So what we do is high probability short. Three things come together. Three things come together, and what we have your first successful collision or clustering of the three concepts together. Beautiful trade, powerful trade. Where is it going? Going to the ABC of this prior wave, 999. You have to, these three, four things have to be in your head 24 hours. Anything you're trading, you must know this, all levels, all times. That's why you cannot do this across 10 contracts, or sorry, 10 contracts across 20 markets. Impossible. 3 or 4 ETFs, 3 or 4 stocks. ETF stocks, if you want to play that game, you need to know rotation sectors, clustering methodology, and add this to this. This is technical, pure technology. It works. It always works. There will be some unexpected news 10 times a year. There are 250 trading days. If you have done bad days, you still have 240 good days if you follow the rules and the structure. So there we are. This is how it works. This is how you need to know. Integration of these three things has to happen every time. No emotions. I don't know what's going on in the news. I didn't see the news. I didn't see it's a federal announcement, FOMC meeting, or interest rate cut, and all these things. They are useful for cluster-based market rotation, not for technical trading. Right? Yeah, you can add those. If the bad news is bad, it'll be foolish to go long. If the news is bad, you go short. Let's say the news is bad here. You went short here. You went short here very nicely earlier if I showed you, right? Everything came together. This is also a good thing. So this channel was built. ABC came back to the top of our channel. Good shot here. This is also retracement. Boom. We already did that retracement from here to here. This from here to here, the height of this, 40% or 38% has been retraced right here. Channel on the top. Right? You can just start seeing things, putting it together. Start seeing it. Top of the channel from this impulse, 48% retracement, which I already had. And then what we have, what do we have here? So we have first rule, ABC target. Is that one of the ABC targets? So if you're looking for a very short target, you may not have. Now this is I think a good point. Actually, we can discuss that also. There's nothing telling us not to use single 2 bars. I can use the 2 bars to predict a very short target as well. Let's do that. ABC, right? First target. Always look for first target. If you can't see a bigger targets, look for short targets. Short target, because we are using the waves, bigger waves to A, B, C, big waves to do this, right? You can also do this with the short bars, short 2 bars, bar high, bar low, 2 bar, just 2 bar alone. All right, so let's do this. A, bottom of first bar, red bar, top of second bar, and the bottom of the same bar, which is right here. Let me adjust this. So you see this, I use 2 bar, A, B, and C. I got to do it. Oh, sorry. Where am I? Yeah. All right. Okay, so bottom, top of this bar, do it precisely, and the bottom of this guy. So where did it go to? The 2 bar itself, the 2 bar signature. I just offset it here. It's the same height, right? Same height. A, bottom of the first bar, second bar, close to the pivot. This is the pivot. You're doing in the pivot zone. In the pivot zone, I took this A, B, and C of 2 bar ABC. It gave me 261 right there. See that? This gave me 261 right there. So what I can do is, in those cases, when I'm doing the 2 bar, I can say, okay, I'm gonna do this different color. I'll make it white. White is always right color. Right here. See that? Or if white is too bright, we can always do gray. So I am psychologically understanding with time over and over what these colors mean. But they have some meaning, the story behind it. Background. Now you see market is moving in background is just moving in these zones. Now you know why. Now here's the thing. 2 bar gave us a structure. First rule followed. Yes, I followed the first rule. I have some intimate knowledge about my ABC target. Right here. In here. Okay. So this is better. Why? Because I have a channel also. And now we have a big channel ABC. Now this is the top of the channel. This is the mean. This is the mean boy. It will keep pulling Wall Street mean boys right here. See that? They are rolling across the mean boys. There's a complicated stochastic model which goes through, talks about reversion to the mean, and the interest rate model is such a model. There's a Heston model. There are 4 different models, mathematical models, and I will get into quant models later in the future. But right now, right here, 2 bars. ABC, okay, cool. From here to here, big impulse, retracement of 40. Rule 2, perfect. Channel, where are we? Channel, 100%, 161, beautiful, shot. 3 things came together, shorted with extreme success. $3, 10 contracts, it's 3 grand, 6 grand, 5 grand. We're talking about some serious money by serious understanding, putting the basics together. All right, so now let's do the last part, and so we can conclude this business. And I hope you enjoyed this freeware series, and put it to use and challenge this. Send me charts, email me charts. This is the whole S&P market. That's all. 500 stocks, biggest US economy right here in the world. $16 trillion. And we're tracking that right there. It is dancing to the laws of nature. Now this is just very strong fundamental structures which have been exposed to you by integrating 3 things together. And this can be also easily programmed. And you can get these signals right here. This can all be, these blocks can be plotted exactly like this. These buy and sell signals can be plotted like nicely. They don't need to know. You can be part of the education series or just simply plot this, right? So there we go. All right, so congratulations on finishing your basic 101 becoming a trader video series. All right, so let me give you a bonus, as I said I will, which is the timing. Now there I have around 50 methods of astrophysics to time them, and geometry models where I've combined the geometry of the cosmic energies and astrophysics and planetary energies. I know in advance. I can pick this point and tell you this will turn here. I can pick this single point and price. I can tell you market will stop here, right? Those are very advanced models. Massive research has happened. But you cannot understand those complexities unless you have a very strong framework to go off from. It will lead to confusion. So you master this for 90 days, day in and day out. One thing, or 2 stocks, 3 stocks maximum, or just ES, or just pick one ETF or whatever you want, just which has some vibration. S&P is right here. Most complicated market to trade is S&P right here, demystified. So now, having said that, with this quick motivation speech, let's see, market went here, and this down channel went to the 100%. Now you see it is giving the channel structure. You can go long here because this was a long level, right? So, okay, so you got the idea, and then went to the extension here. See this 261 extension on the channel. So we go long here. It's already long levels. Now you see everything coming together here. See this end points of the channels. I'll go long and short, long and short. Short here, 161. So we have 2 things coming here, right? If all 3 things come together, it's the way to go. So it'll not be easy for you to. That's why I'm saying print this page. Take a print out of this page. Go through rule 1, 2, 3, 4. 1, 2, 3, 4. 1, 2, 3, 4. At least 3 should match. You have beautiful thing. Your risk will be reduced by at least 80%. Okay, it's about risk management. All right, so if you want to do verticals here. Do verticals here, verticals here, verticals here. It's about the right location. The second part of location. Now you have 3 ways to find right location. Putting it all together gives you the high probability of finding the best location possible based on the tools I've shared with you. The last one is the timing possibility. Now there are various ways to time the market. I said more than 50 ways. I'm just gonna give you one free, and I'll use the Andrews channel and see if that works. Okay. All right. So let me delete this. Now the problem with that is you may not have this modified where is it? Right here. Shift pitchfork. Modified shift pitchfork is based on this guy, but they have modified the handle part of it. Okay, that goes to 50% of this height. But let me see if I can do this with this guy. If all right, so we have this A, B, and C, which build this channel for us, right? That's here. See, let me draw that so you can see it. So this is a channel going down, and we have extension on this top, this bottom, rotating. That's fine. Going in the mean reversion. So this point A is known. This is A. This is B. This is C. This point is not known, right? This point is only exposed by this channel midpoint. And we're going to use that length. Now again, as I said, this works very well with this modified shift, but I will attempt to do this with this. It's pretty simple. Take the height, not the height, okay, take this midpoint where the A, the B and C, this is A, B and C, where the midpoint is, where the channel is crossing. See this one? Channel from A to B and C is here, and this is B and C. This is midpoint of BC. So I've taken the A and midpoint of B and C, and I will use that bar. Let's see if that works or not. Let's make it yellow, purple. Alright, that's fine. Let's do this. Okay, this is better. Alright. So once we have this, this is going to be your distance from pivot to pivot, which usually in the shift should work. So what I do is, now I'll go from pivot to pivot. I'll move the bar. Pivot to pivot. I use this pivot. Let's move it backwards, precisely right here. Now this is the height. End of this bar height should be a timer to change of the direction. Market is going in any direction, it should change direction. So what has happened here? We have added the fourth element. This was 2 bar ABC target. This is gray because this was a 2 bar. The gray is the color for 2 bars, or you can choose any other color. All the grays on your chart, when I see your chart in color, all grays should be telling me exactly where it came from. It should be doing like this. I said, okay, it's coming from this 2 bars. So I know this is the 2 bars you used, and it came here. Second thing, retracement from this big impulse A to B. This was the inside the first impulse. You're going inside back into the impulse. 38% that happened. We had a channel top. Third thing, it happened. Now fourth thing happened here. I took the A and the midpoint of BC, and I used that distance to track the timer of the market from this next pivot. It printed out exactly the top bar. Four things came together. If you have guts and the cash flow, 100 contracts, 20 grand. Alright, so now let's not get too excited and see if that really works or not. And we will see. Now sometimes I have to use, this is also pivot, right? Boom, boom, pivot. So I have to use all the pivots. I don't know which is going to work. And I have to just take my chances. So I use, which pivot did I use before? I used this one. Is there any other pivot here? This is also pivot. It's a 1 bar pivot, right? It's not drawn by the zigzag, but you can see bucket came here, went up. See this one? Stopped here. So I got to use every pivot. Smaller the pivots, more energy. Think about a spring. The spring has been compressed here. It's going to blast off. So I use this bottom. Market went up here 20 points, whatever point it is. It went up not 20 points, it went up 7-8 points, which is fine. 70 cents S&P. So I use that. What happens here? It pinpoints the bar. Now what has happened here? Did we follow all the rules here? Let's go through the 4-step rule process. First, ABC. From here, ABC, this is one of the 450, 550 level. We know this 250, 450, 900. Okay, it is there. Okay, perfect. Rule 2, retracement of the first impulse. Well, there's no first impulse because we are the end point only. So what we have to do is, there is no impulse here. There is. So if you have no impulse at the end point, but this is the beginning, right? Impulse will come later. It will go up and then come back. It did not happen here. So what is stopping us to do what we did here? Trick of 2 bars of opposite color, low and the high. If I do low and the high, this height, it came down back into this almost 80%, right? We had this 0.89%. That is biblical number I told you about. So from here to here, big wave, so the 2 bar, here to here, I am trying to apply my law 2. So if I do this here to here, this guy came back almost 90% into the wave, impulse 90% into the wave. This is the I'll tell you where it came from the Bible. Alright, so there you go, right? There's 2 bars, it came back here. So okay, we can say, okay, with 2 bars we applied. Alright, we have to apply the laws because we don't want to break out, we want to do the 3 laws. Okay, I use these 2 laws. I'm not trading in this bar until it comes down. It came down. Okay, now we have an entry point. Now this timer can be off by 1 or 2 bars, which is fine. It's just giving you idea not to get in the middle of until the waves are over, times are over. Alright, so here the second law is applied. Andrew channel, where are we in the channel? In the bottom of the channel. Okay, perfect, we got that going for us also. 4th timer from this small compressed wave, which is gonna blow up somewhere here. This is the end point. So it was 1 bar late, but it came together. So we got the 4 points coming together. Beautiful trade. Alright. Now this is just like a poor man's way of finding the timing. So okay, now A, B and C we did, right? We did A, B, C. So we have this short from ABC. From where ABC? This one. A, B and C. Why this one? Because this is the starting of the block I put together, so I can see ABC is here. Where's the end point? Here, right? Okay. Smaller ABC will give you what? 260 or higher endpoints. This should be 266 or 333 because I know I'm using larger, or should be 161 minimum from the smaller waves. Bigger waves I will have all 3 targets, right? Smaller waves I should have bigger targets. The small wave I want it to end at a bigger target, but there's a bigger wave behind this 1 hour. There's a 4-hour chart, daily chart, weekly chart, which is also rotating the market, right? We are just looking at one single time frame. Now this is where difficulty is going to come to you. Once you master 60 minutes, you think this is the end of the world. You'll not be able to apply it 4 hours. You will say, oh my god, why this one failed? Well, go to 4 hours. That is where the big boys are playing. That is their minimum entry time zone. They don't go below 4 hours. They don't care below 4 hours. It's all noise. So something did not happen on 1 hour, go to 4 hours and apply the same 4 laws. Alright. So I got this ABC. Alright, so from here to here, impulse, this is, as we saw, 60% from here to here. So law 1 is there, ABC of this has already been plotted for us. This is the impulse down, and from this impulse it came into the impulse height, 60% into the height. Our area 50-60 is right here. Law 2 is done. Law 3, the top band is on the top of 161. Okay, the 4th thing, if you want to see if that is required or not, if it is, we have to see the channel bottom. So I'm gonna look for first small zigzag like this, zigzag like this. You know what I'm saying? We can use all the big ones too, but short ones. See, boom, boom, short waves, boom, boom. Compressing the energy is gonna blow. You want to see where else can it blow? There we go. So I don't know. I can look at this one. This one came to the bottom of this one, moved up, and I can say, okay, let's do this one. This one came to this top. So yeah, off by 1 or 2 hours, that's fine. I'll give you a basic idea. Okay, what about this top? If I use this top, it comes to this bar. So this one is 1 bar earlier, this 1 bar late. So get an idea, okay, hey, there's something gonna turn here in this 3-hour period, 2-hour period. So now everything comes together, right? So yeah, that's why we're telling you to buy options to start with. Buy ES future options. What you will buy here? Buy 1 put. It is same as controlling 10 ES contracts without taking a huge risk. If it goes against you, you'll not blow away. If you just buy futures and it goes again 10 points against you, you lose 500 points. 10 times 10 times 10 is 100. 100 points is 5 grand. You lose 5 grand if it goes 10 points against you. If you have just 1 or 2 ES future option contracts, you can still enjoy the whole thing of having 10 contracts, but with the risk of $1,000. And you can give some time. It may just go up and down, and boom, right? But we have combined the 4 things together. So there we go. Let's do some more tests on the timer and see. So this top went to this top. See this top came to this top. Was the tradable thing we wanted to trade? This is at the bottom, right? This is the bottom. Channel was broken. It would have gone to the mean. It did not go to the mean, but you know there has to be some evidence here. So what did we trade here? Is there ABC? 4 laws. So what we have to do here? We have to do at least 2 bars. This was the low, this was the high. So let's see if we have any evidence of ABC. I'm giving you real life examples every day, but now I'm also showing you the basic structure difficulty of becoming a trader. So this is the 100%. AB. So now this is AB should be equal to CD. That's the law. This height should be equal to minimum of this height, CD, which it was. That's why it's showing dotted, 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 right? So we have, okay, this is very not a good target, but it is some target if you want to desperately play something. So we have, okay, ABC target is here. It is should be minimum 100. If it is somewhere here, 100 is here, I will not even try it because it did reach 100. Okay, we have something. How about this first impulse retracement? Or you're planning to go short from here to here. So if I take it from here to here, big impulse, how much it pulled into it? It didn't even go to 30%. Let's see. We have to try this one because this one has to be really tested. So let's see if we go from here to here. I need to put the numbers here. So from here to here, the impulse, the red one, is 0.38, or not 0.38, sorry, 2.5. So right here, sorry, 2.5, 2.3. But this is opposite of this, right? So I think it should be opposite of that. Set as default. Let's see, what is it? That one came here. I have to do the other one. Well, this is flipped on the other side, right? So from this is the one, this is 0.25. So it's a very low grade. It should be it should be in the middle for a strong move. This is high risk. It's still working, but it is high risk, right? Okay, so I need to apply my laws and see if I want to, before I make a trade, no matter what, I must apply my laws. That's the whole key. Okay, So I'm applying my law. Even if I'm forcing them, I'm still applying my laws. 2 bar laws, minimum you need 2 bars laws. Okay, we did that. So it gave me ABC, 100%. Minimum lowest possibility target from lowest 2 bar trend. 2 bar trend, lowest trend, 100% lowest target. And where's the Andrews here? Andrew to short should be on the top side. It's not even at the midpoint. So that law is failed. Okay. So so we have 2 laws which worked. Third one failed. It is not on the top part of it. Fourth one, timer came in. So we have at least 3 things out of 4. So there is a 70% chance that our analysis is going to work out because we have 3 scores which are positive out of 4. So then it still worked out, right? It worked out, but we don't know. It's a higher risk option. If you are usually trading 10 options, just trade 1 because you have to do something. So my friends, so this top predicted this top. All right, now this top was better. Why? This is the last example. This bottom, let's see. I need to have some zigzag. This was a good one. Market was here, zigzag, and then it took off. So this could be a smaller compressed spring. It came here 1 bar early, but it did that. So if you wanted to try going long here, which we already predicted, it is endpoint of ABC, which came from this guy 999 level. Now you have to remember this, right? You have to have some little bit of understanding and remembrance. You'll not be able to remember this if you're doing 10 things. You're lost. You'll be totally lost. And especially if you do 2 more time frames on 10 stocks at 20 charts, to do one thing is impossible. Right? That's why I say master one thing at a time, 1 chart at a time. Know everything there is to know about a chart. So now I can say this because I now am remembering all this, right? I'm remembering my movie story. I may not remember next year, but I know now. It's very fresh in my mind. I have to track one and keep it fresh. Keep it fresh. Alright, so I said, okay, if I take this smaller pivot, I like smaller pivots which are not printed here. Okay, this is possibility. So law 1, ABC target, yes, it was there from 999 target from the way on the top. This is the terminal point. 2, retracement. Is there a retracement here? Okay, let's check. So what we can do is, again, when market is just starting out, you need to use 2 bars. So let's use 2 bars. So this is the one. I will move to the bottom. And height, I'm taking the height and say how much in the height have you come inside. It came inside right there, green and yellow line right there. So it came there. Okay, so law 1 passed, that we are the end of the terminal point. Law 2 is that, okay, we will see this is the point where I want to go long. Okay, Andrew forecasted here, this is the level to turn the time, and this is the bar, so it came a little late, 4 hours late. Okay, or we can just say, yeah, 4 hours late. So it is okay. It's 1, 2, 3 hours late. Okay, that's fine. So how about the channel? So we have at the extreme level of the channel, yellow one is what? 206, right? So we have 3 strong things here. ABC, endpoint, retracement of 2 bars. Well, this is the beginning of the trend. So we have to at least use 2 bars. Forecast was little, what is this lines? Forecast of the channel, which is there at the bottom, 3 have passed. 4th is the timing, which is off, but it is giving you a general idea that, hey, this is the area market is gonna move. All right. What if we use this one? So this is a small and this is a high and this still came down, right? If I use this one, that's why this one is a little bit of this cannot drive it, but it can add value to it. If I adjust this to the next smaller pivot, compressed spring, I don't want a big stretched spring, I want compressed spring. This can also work, but this one has more power. Now this one pinpoints the bottom, but we're gonna do the retracement. So see that. So if you're a 10 lot trader, you can trade based on the few 3 laws. You can trade one, test the water. Everything comes together. You can add more. Now again, I have Searle laws. Searle laws will tell you where the energy is ending precisely, how to enter precisely. That's like very advanced technology, and that is a paid course, unfortunately, because now you're getting into something which is heavenly knowledge. So first you master the earthly knowledge, then we talk about heavenly knowledge. All right, and unfortunately, the entry to heaven is not free, but for now, you have enough freedom to be financially free. So there we go. We are able to successfully demonstrate with a lot of excruciating pain all the 4 laws. And I hope you practice this for 90 days. It takes minimum of 60 days for the mind to change the structures and the patterns in the mind. Pick, if you have to trade stock, 2 things. Maximum of 2 things. Now, same thing I showed you in 1 hour, you have to do same thing on 4 hours. So you have to have 2 time frames. 4 hour, the bigger cycles, 1 hour, intermediate cycles. Don't go below that 15 minutes unless you are a professional trader. You'll not be able to manage it, as you can see why. 1 hour is a good controlling midpoint between the big boys 4 hours and the day traders which are trading on 15 minutes or 5 minutes. That is the center point which merges the 2 teams together, and you are the facilitator of those 2 groups, and you will understand the games going on. So if you want to trade 5 times a day, 4 times a day, go down 15 minutes. So 1 hour and 15 minutes. If you want to trade slowly 3-4 times a week, you go from 1 hour to 4 hours. That's it. So 4 hours is the controlling chart, 1 hour is the execution chart. So we have been talking about the execution chart on 1 hour based on the 4 hour and 1 hour. So now exact laws you can apply on the 4 hours as well. Thank you very much, and once you're done with this video watch, I will send you the certification. Thank you.